We're not in the studio today, but gosh, do you feel with like all these changes you're hearing about between tariffs and the stock market and the Federal Reserve and the wars and the peace treaties, do you feel like you've got sand in your eyes? You know what? Enter the Sandman. Hey guys, it's your favorite mortgage guy, Steve here. Hey, listen, as you can see, I'm not in my normal studio today, and I'm using the laptop and a separate script. So, hey, just be patient with me. So, listen, questions. Let's start with your questions. First of all, do I need an appraisal if I'm putting down a large down payment? Okay, so the answer could be yes, could be no. A lot of factors that go into appraisals. And just so you know, an appraiser is an independent reviewer of the property to evaluate the collateral value of the property that you're buying. So the lower the down payment, yes, you would need an appraisal. A lot of times, if you put 20% down on a conventional loan, you may not need an appraisal because there's such a large database of sales that have already occurred, no matter where you are, what community in the United States you're in. Fannie Mae, Freddie Mac, VA, and FHA have that database. So they look at those factors as well. But in most cases, if you're putting down 20% or more, you do not need an appraisal. However, what I will tell you is it's an AI driven automation system. So it could come back with one, require one, it could not. So we won't know until we run your scenario. Is it time to refinance? Absolutely. Get into the pipeline because the problem is the appraisers are getting backed up. Closing agencies are getting backed up. So definitely get into the pipeline. Renovation loans. Now, I got 6 questions this week on renovation loans. Let me explain real quick what that is. So a renovation loan is, let's just say that you have a house to sell. Well, you already know when you sell your house, you're probably going to spend more on the next house. Well, once you go out there and you start finding out that you're going to have to spend two, three, $400,000 more, if you decide that's not for me, but you like the house that you're in, you just can't find what you have that's affordable. Well, what you can do is you can renovate that property. We've got a loan that will come in, will pay off your first mortgage, so you only have one payment, and then you can borrow up to whatever the value is and also pay for the repairs. So essentially, let's say you want to put in a new kitchen. You want to put a new roof on, but you also want to raise the roof to add another bedroom. Well, those kinds of things can be added into the renovation loan. Another example, I get a lot of questions on this, is my parents are starting to age. We've got room to add another building in on my land, or maybe add what they call an ADU onto the back of the property. An ADU is basically like a one room that's got a living room, it's got a kitchenette, and it's got the bedroom, and parents move into that. Yes, you can do that as well on the construction loan. So anyway, let's get going here. So I hope you guys had an amazing 4th of July weekend. I can't believe that in 2026, it's going to mark America's 250th birthday. Now get ready, because you want to know something? I firmly believe that when you have a celebration at the 250-year level for an entire nation, it is going to be a party that'll go down in the history books. Now let's talk about real estate and headlines and your money. People always say, stop reading the headline. How many times do I tell you? Read the story, not the headlines. So here's what I mean by that. I know I've said it for the last several weeks, but there's a lot of things out there that people don't think about when they're looking at the headline, especially with all the negative media that's out there talking about different things that have nothing to do with what's important to the operation of this country. Now, this is not a political message. I'm just talking about the headline. So the headline might say, stock market tanked. Well, it doesn't say what. If you read the story, it will really tell you why the stock market might have moved. And it doesn't mean the stock market tanked. Just like interest rates are on the rise. I saw that 3 times this week. No, they're not. Interest rates are not going up. They're actually going backwards. So read the story, not the headline. So let me start with inventory. Is it rising? Well, technically, yes, because that doesn't mean that homes are suddenly easy to get. Much of the new inventory could be overpriced, or it could be stale listings and then finally being relisted so that it appears like there's new inventory out there. It's not a buyer's paradise just yet, but guess what? It's improving. Now, refinancing. Should you? Okay, well, that question comes up all the time, and I think I just answered it. And it depends on what you're sitting on. I don't care about your 2%, your 3%, your 4%, or even your 5% interest rate. I tell you that all the time. And the reason why I don't care is because you picked up a ton of equity in the past 24 to 30 months. So you went out and you bought a car for an $800 payment. You might have bought a boat or a jet ski or a Peloton, or you got $40,000 in credit card debt. This is why I don't care what your mortgage rate is, because you got all this equity you're sitting on. And if you take out a second mortgage, the blended rate and the blended payments are going to be higher. I mentioned to you the last couple of weeks, my average client is saving almost $3,000 a month in cash flow because they're refinancing at a higher rate, but taking and getting rid of all their non-tax deductible debt, and their credit score is going up. Now, if you're sitting there like these other people, just call me. I've got all the software. I can run the calculator for you. It's no big deal. So, you know, a lot of times people ask me about where do I get down payments from? So there's a lot of places. You've got grants. You can borrow money from your 401k. Don't forget about my Home Fund It program. If you're a first-time home buyer, look at homefundit.com. Homefundit.com. It's my crowd sharing down payment assistance program. It's a great way to crowd share. People want to help people, so they want to share. So, you know, example, if you're newlyweds and you guys are already living together, well, you already got the Keurig and the panini maker and the self dog walker and all the other stuff that people are buying right now. So why not just do a crowd sharing for your down payment on your house? It's easy. So let me talk about some spotlights here. Here's an eye opener. Cape Coral. What's the worst performing housing market? Yep, that's it. Cape Coral, right here, right there in Florida, the Cape Coral Coast. This is affordable paradise because you want to know something? Prices have seen an 11 to 18% drop, with the average sales price being about $340,000. I don't know why, but Florida went through a major housing boom. So Florida, Texas, Arizona are the three worst states in the nation for housing crises right now. Doesn't mean it's time to panic, not necessarily, because corrections happen. Now, for buyers, it's an opportunity. For sellers, it's a wake-up call to price reality. Okay, the Fed, the real talk. Now let's talk about the Federal Reserve. Yep, again, we're going to talk about him. He says inflation's under control, yet rate cuts are still being postponed. There are 19 members on the Federal Reserve Board, 19. If this were a corporation, a lot of the leadership would have probably been replaced by now for inconsistent messaging. The president would have been fired. Now, right now, the answer the answer to the question is, will they cut rates on July 30th? It's not a no. We're kind of thinking it's going to be a no, but the expectation is 2 rate cuts by the end of the year. Why he's hinting at September instead of now is your guess is as good as mine. It feels like it's more crafted, maybe a narrative or some strategic plan, but let me tell you, the pressure is on. So what does this mean for you? Well, for mortgage rates, keep this in mind. For the past 50 years, mortgages have been calculated. The average 30-year fixed rate has been hovering around 6.875%. Guess what? That's almost exactly where we are today. So yes, rates will likely come down. And here's the bottom line. What do I tell you? Buy the house, not the rate. Buy the house, not the rate. Because when rates drop, you'll already be sitting on additional equities while others rush back into the market and push prices back up again. So guys, listen, I don't want you to believe that these headlines are going to steer you in the wrong direction. I'm your favorite mortgage guy. Let me help you dig into the real estate story. Let me run the numbers for you. Make smart moves, and always ask the right questions. Now, if you need help figuring it out, this is why I'm here for you. So I'm going to ask, look at all my social media stuff along the side here. Go like me, friend me on the Facebook, LinkedIn, TikTok, Instagram, and all the others that I've got out there. Go out there because I put different messages in different places. So I'm your favorite mortgage guy. Tell your friends, your family, whoever you know that's thinking about doing something with mortgages, tell them to call me. Guys, I hope you have a phenomenal weekend. Bye now. Credit problems? We got that solution for you. It didn't break overnight. Yeah, that's true. Takes a little time, a little bit of cash, but you'll bounce back and make that dash. Call me, Steve, your favorite mortgage guy. I'm the reason that you can make dreams touch the sky.